Demand is as low as it was in 2008. That cannot be good news. Consumer sentiment is not in a good spot. What is going on? We're going to talk about that today. Welcome back, everyone. I'm Caitlin McKegg. I'm a real estate broker here in Phoenix, Arizona. Let's start by talking about what's going on in the economy, and then we're going to get into demand and Phoenix real estate. The Fed's own economists now expect a Goldilocks scenario. No recession, low inflation, and positive growth. So essentially a soft landing, which is what everyone was saying not everyone, but many people were saying we wouldn't achieve because the Fed had been too aggressive. There was a lot of concern over that. The Fed is now saying that they're looking at their model, and it estimates that CPI will be at 2.3% by the middle of 2024. And over the last year and a half, they've been hiking the federal funds rate to tame inflation and get it back to that target of 2%, which there's also been some concern over the fact that 2% isn't realistic. So that some people have spoken out about that. But apparently, according to their model, we might be at 2% next year. So what does that mean? Are they going to continue to hike the interest rate, or are we pausing now? I don't know. But they're going to meet next week and announce what the future holds, what they decide to do. So we'll find out more information next week. But I guess it's good news. If they think we can actually achieve a soft landing, that would be ideal rather than throwing us into a recession. On the other hand, though, we have Jamie Dimon. He's the CEO of JP Morgan Chase. He says it's a huge mistake to think the economy will boom with so many risks out there. So he says to say the consumer is strong today, meaning you are going to have a booming environment for years, is a huge mistake. So we do have some pessimism out there that, we're not going to have a strong economy. Therefore, pretty much means we have a recession. And then we also are seeing that, we've avoided a recession. There are a lot of headlines out there that are kind of announcing that or calling that right now. So not sure what's going to happen from here, but we'll find out what the Fed wants to do next week. And tomorrow, we're going to get some additional information. We're going to get the CPI, the Consumer Price Index. And that will tell us what's going on with inflation. And that also might indicate what the Fed does the following week. Will CPI matter again? This is Mortgage News Daily asking that question and essentially saying the last few times CPI came out, it hasn't really moved markets all that much because it's been somewhat in line with expectations. And there's been other economic data that has been or outweighed really what the CPI is saying or outweighed the CPI news. And therefore, CPI hasn't really moved markets. But tomorrow, we'll find out where that comes in at, and if it is in line with expectations, it may not make a big impact, but if it's not, we may see some movement. And so what does that mean for real estate and why do we care? Well, that could change where mortgage rates are at. So if you are a buyer trying to lock in your rate tomorrow, you may want to check in with your lender and just see if there's any change in rates. And if you are a seller, let's just hope that rates go down because we need a little bit more buyer activity out there, because our demand is as low as it was in 2008. And I'm going to talk more about that. So let's talk about consumer sentiment. This was a fun little thing to see. A record high 82% said August was a bad time to buy, citing affordability concerns. Not surprising, but that just sucks to hear that 82% of buyers say I'd want to buy, but I'm not going to right now because it's unaffordable for me. So demand, lowest levels since 2008. Maybe, let's see. Yeah, I think it's the lowest since 2008. But we're in line with 2008. It isn't as low as it was in November of 2007. Yay, October of 2007. So let's look here. So if we have the lowest level of demand since 2008, why are we not seeing a market crash? It's because of supply. So our demand right now is at 76.7. This is the Cromford market index, by the way, and they measure supply and demand in Phoenix with this index. And so the last time we were around 76 is June of 2008. It was 78.9. So we do indeed have demand levels like we did in 2008. But the biggest difference, what you'll notice here, is that the supply is higher than the demand. And today we have our demand that's higher than our supply. So that's really the key to keep in mind here is when we have demand that outweighs supply, we're still going to have stability in prices and upward movement in prices, as a matter of fact, because you have more people wanting fewer goods, essentially. And back in 2008, we had a ton of supply and nobody wanted it. So it was the reverse scenario. And that's why we saw prices crash, not just fall, but crash. Today, we have the opposite scenario going on, even though our demand is super low. But what sucks about this, if you're a seller, is that you don't have a whole lot of buyers out there. Maybe you're one of the few listings because supply is low, but you don't have a whole lot of buyers wanting to compete against each other to buy your home. So let's talk about what the Cromford report is saying about listings right now. We're starting to see active listings tick up a little bit. And they say specifically the current trends in the market are lessening the negotiation advantage for sellers and probably making them just a little nervous. So not the best news if you're a seller. Now, keep in mind, this is not terrible by any means. We're going to look at the overall CMI. We're still in a seller's market, but this is a trend we want to watch because if we do start to see our active listings or our supplies start to climb and we keep this low demand, then before you know it, you're in a situation where our supply outweighs our demand, and we all know what happened last time. So do I think we're going to get there? No, we would need to have a lot of supply come to the market to have that red and blue line switch. But, I'm not predicting anything. You never know what's going to happen. So if you're a seller, keep that in mind. Overall, though, we're in a seller's market. 153. So 110 is the start of a seller's market according to the Cromford Market Index. I'm a subscriber to the Cromford Report and they're amazing. They analyze all this data in the MLS and have this really awesome index that helps determine where prices are headed based on supply and demand in our market and have always been right. The index is a really great leading indicator. So 153 is a seller's market. It's a weak seller's market, but it is a seller's market. Demand 76.1. We talked about that. So 100 is kind of that normal range. So demand is lower than normal. Supply, however, is even further below normal. So it's about 51% below normal, while our demand is only 24% below normal. So that's the difference between those two. But overall, this is where we stand. Now, of course, there can be a difference depending on what area of the valley that you're in, because some cities are hotter than others. And we're going to break that down in just a minute. But I wanted to share this visual of the Cromford Market Index because, we can look at this every week and I can tell you that 5 weeks ago we were at 160 or whatever, but until you see the trend, sometimes it's hard to understand where we're heading and what's going on. But you can clearly see that since we peaked in June, we've started this downward trend, and I don't know where it's headed next, but it's certainly softened. At the beginning of the year, we had a lot of price gains. We saw the CMI go up. So this was just really showing that we had more buyer demand than we had in the past. And you can see how far apart these dots are. That was a big jump. Week over week, we were seeing larger gains in how the CMI climbed. And then things have kind of moved pretty slowly with these dots being close together, but we are on this downward trend. So I'd like to know from you, what do you think? Is the CMI going to trend down for the rest of the year? Are we going to go up? Are we going to stay stable? Put it in the comments and let me know. My professional thought on this is that we're going to probably just kind of hang out around this range and finish out the year. The summer is always slower for us, and then we have a couple months of some increased activity until we get into the holidays, and then we kind of coast for the rest of the year because things just slow down. So that's my professional, prediction, if you will, is that we're not going to see too much change with the CMI. But put it in the comments. I want to know from you. So let's look at every city because, like I said, each city performs a little bit differently. This last week, there are 4 cities that moved in a direction favorable for sellers. That's the ones with the green arrows. So Paradise Valley, Cave Creek, Tempe, and Buckeye all moved in a direction favorable for sellers according to the CMI. And then 13 of them have red arrows, which means that favors buyers. So if you are a seller in one of those cities with the red arrow, you lost a little bit of ground over the last week. But at the end of the day, it's not a huge change. We only have one city that's truly in a balanced market. That's Queen Creek. Maricopa is just right on the cusp there. Everything else is really in a seller's market. Chandler is interesting though, because they've been leading the pack and have had a pretty strong seller's market. 2 weeks ago, I shared a personal story of clients that I'm working with selling their home in Chandler and how competitive that process that was. But they're starting to see some changes here in Chandler and losing some ground, 16% change month over month. So if you're in Chandler, if you're trying to buy in Chandler, this is good for you. Things are softening, but if you're a seller, keep that in mind. Things are softening a little bit there. Let's see, what else do we have to call out here? For the most part, the change of all of these cities, the average change month to month is we've seen an acceleration in that in softening. And that makes sense, right? Because we looked at the overall CMI and that's going down. So when we average the change of all of these cities, we've seen some softening. This week we saw a negative 3.9% when we compare the month over month change. Last week we saw a negative 2.9% for that month over month change. So it's definitely accelerating in terms of these numbers coming down, but it's nothing huge yet. It's just going to be something to watch. If this trend continues, then we will certainly see prices kind of stabilize, and they're not going to fall until the CMI gets under that 90 mark and we truly get into a buyer's market. Then you could see, you could expect that prices could start to come down or appreciation starts to come down. But for now, we're still in this seller's market truly. So where do you think we're headed with the CMI? Do you think the rest of the year is going to be fairly stable, or do you think we're going to see things go down or up? Maybe you are an optimist and you think things are going to go up, but put it in the comments. If you are considering buying, selling, investing, not really sure where to start, check the description below. My team has a link for a discovery call where we could help you get started, answer some questions for you. There's also some helpful links there to search our MLS or get an instant home valuation. So hopefully some of that's helpful for you. Next week, I will be back with another market update on Tuesday. Thanks for joining me, you guys. Have a great week. I'm Caitlin McKegg with the Desert Dreamers team.